Hello, hello. Hello, everybody. This is Chris Roebuck with Live My Life Debt Free. I'm the founder and CEO. I'm going to tap the screen and turn it around. I'm going to give everyone the opportunity to join. Sebastian 197. Thank you for joining me. Hello there. Thank you so much for joining and speaking up. I appreciate that. Sometimes I have Secret Service, people. But I am Chris Roebuck, Sebastian 197. I appreciate you joining. I'm the founder and CEO of Live My Life Debt Free. And what I do is I make sure that I empower people to live a debt-free life through teaching financial literacy. And I am really excited about it. I'm on my way to a workout, but I decided to stop and do this scope. I'm going to talk about 2 ways to starve your debt. I talked about 5 ways to starve your debt this week, which is on my website, which you can find all of them at www.livemylifedebtfree.com, and you'll find many other blogs there. I blog weekly, and you can subscribe to my blog there as well. That will definitely help you to find common sense ways to just operating your finances better. So let's just get on with the refinancing for lower interest rates. This is a great way to starve your debt. If you have really high debt, if you have high interest rates on your credit cards, on your car loans, on your mortgage, now is a great time to refinance to get a lower interest rate. Especially if your credit scores are great, and if they're not so great, I'll talk about that in a minute. But if your credit scores are really great, if your debt to income ratio is good, you will definitely be able to get a lower rate. One thing that I want to say about your debt to income ratio, or some compensating factors, I'll say that much. If you refinance and you don't get a lower rate, or at least a rate lowest as you would as you think you should, for example, then I would say appeal that and point out some compensating factors that might make a difference. Most lenders these days will run your credit report. We're all numbers, which means that they look at credit scores only. It's not so often that they look at the person or the other compensating factors, like how long you've been employed, how long you've lived in your home, or how long you've rented and had a real clean payment history. A lot of those things sometimes are not taken into consideration, but if you appeal that, there's a way that you might have some input on changing that decision. So for those who are just tuning in, or for those that will replay this message, I am talking about 5 ways to starve your debt, and the first one is refinancing for lower interest rates. And that does not mean refinance for a lower interest rate, get the loan approved, and then go on a shopping spree. Sebastian 197, if you can hear me and if this is making sense to you, please tap your screen to let me see some hearts, or let me know that you can hear me. So that does not mean that you take the extra money and you go out and shop. Take the extra money, add it to the next lowest loan with the next loan with the lowest loan balance, and this is going to really move you towards becoming debt free a lot quicker. So let's just say, for example, you refinanced your car. Your current payment is $400. You refinanced your car loan. You get a lower rate. You get a lower payment. And let's just say your payment is $100 less. But you also have a $500 loan after, or that, a $500 loan balance. You can take that $100 that you might be paying $220 on. Now you're paying $120 on the next lowest loan, if that makes sense. I don't usually talk about a lot of numbers because it's tough for people to see, but I do that inside workshops. I show that but I think you get it. And what that is pretty soon is that as you pay off your debt and you add those the next savings onto the next loan, then you'll be able to pay those loans off. Now, it's going to require some discipline. You won't be able to get to debt free, become debt free overnight. It's a process. It took time to get there. It's going to take time to get out. Now, the second and the last that I'm going to talk about on this scope is I really wanted to talk about eliminating let's talk about refusing to charge. How about that? I am Marquisa Join. Thank you so much, Marquisa. It's great to see that you're on today. I just talked about the first one. Hello, my sister. I just talked about refinancing, for lower interest rates, and how once you refinance, you use that money that you save for that refinance. You add that to the next lowest loan balance that you have on that list of loans or on that list of debts that you have to eventually pay that off. So if you're paying $20 on a $500 balance, you lowered your car payment, for example, your mortgage, whatever it is, whatever loan it is that you are refinancing, then you take and say you have $100 savings, as I gave an example. You take that $100, add it to the $20 on that particular loan, and then you just continue on until that $500 has been starved to the point to where it's gone. The next one that I'm going to talk about, and the final one, I'm going to work out, Marquisa. Can you tell? But I want to stop and do this scope real quick. I wanted to talk about refusing to charge. Refusing to charge on credit cards, refusing to use the debit card until everything is gone, because swiping is easy. And I always talk about, but the dollar, it's a lot more emotional when someone has to let go of a dollar. So refusing to charge, refuse to use your credit cards if you don't have the money to spend. If you don't have the money to pay for any kind of item, whether it's going shopping for clothes or bed linen, or if you're going shopping, if you're going out to eat, whatever it is, just refuse to charge and decide to use cash. Because using cash will definitely help you. It'll help you to become disciplined very quickly. Because once the cash is gone, that means that there is no more money, and you aren't going to be incurring or accruing more interest on your credit cards. Because the fact of the matter is that you're creating more debt when you use your credit cards and not paying it off monthly. Now you are increasing the amount of interest that you're paying back to the financial institution. And guess who's getting rich? It's not your bank account. It's your financial institution. And that is sometimes what they're banking on. There was no pun intended there. But the creditors are really banking on the fact that the consumers will not pay that balance off monthly, but let that balance continue to roll. And, so I would say a way that you can starve your debt is to stop charging, stop digging. You said, I use mine for necessities, but I found that there is a minimum that you must spend. Well, you know what? I'm going to have to research that, because I'm not aware of that. Probably $20 or something. I'm not, you said to protest credit score. Okay, well, hey, I love a challenge. I've got to figure out what, protect the credit score. Got you. Okay, I got that. I understand that. But even if you have a low balance, let's say $100 on your credit card, pay that off, before your cycle, comes around. And I really believe what you've said, I am Marquisa, because there's constantly ways that credit, or I would say financial institutions or creditors, are looking for ways to make it harder for individuals. You said sometimes So it's a timing issue. It's a game. Yeah, it is. It is. It's definitely a game. You are correct about that. It is a game. But they are banking on the fact that they're looking for ways to make it harder for consumers to pay off the loan, to pay off their credit cards within the cycle period and so forth. So therefore, if you charge more, then it's more than likely that you'll continue to use that card and not pay it off on time. Therefore, you're paying more interest. Another thing is with regard to that is that with regard to credit cards, if you've ever noticed, let's say you start off with $1,000 balance. You're using that card, and when you get to maybe 50% of the balance, they increase that limit. They'll continue to increase the limit higher and higher and higher because they want you to spend more. So, with having said that, the 2 debt-starving tips that I have it is a game. The 2 debt-starving tips that I have shared with you today, oh my God, it is a trap. It is the biggest trap. That's one of my favorite words. It's a debt trap. That's what it is. It's a debt trap. But the 2 starving tips that I've given today is refusing to charge, refinance for lower interest rates. And I think I need to add this. For those of you who will replay this and you're thinking of doing a debt consolidation, I would say, thank you, Marquisa. I would say, and I'm going to implore you not to do a debt consolidation if your behaviors are not under control. And let me tell you why. If you do a debt consolidation, that's where you actually refinance all of your loans, roll them into one loan, and you still have a problem with using your charge cards, you have a problem with not managing well. Now you're creating another avenue for you to go back out, get another loan, and start the cycle all over. So sometimes when people ask me, what do you think of debt consolidation loans? I don't think that they're a good idea unless you have your behaviors under control. If you can control using your, thank you so much for the heart love. If you can control your spending habits, if you are really good in your discipline, do that. Another thing, please don't roll your cars into your mortgage. I have had some people do that. They'll take their car loans, roll them into the mortgage, refinance their house, roll them into the mortgage, and guess what you're paying on for the next 30 years, or the next 27, or the next 15. Yes, you said, oh no, you never heard of that. Some very smart people that have, that have told me that, and that they've done that, and I tell them, not a good idea. You should have called me first. Not a good idea. What happens if you have an accident in that car? Now you're going to get another car. So now you're still paying for a car that you no longer have. And, so please, that was free. That was off the cuff. I'm going to go work out now. Thank you so much for joining my scope. I'm Chris Roebuck with Live My Life Debt Free, founder and CEO. You can find me at www.livemylifedebtfree.com. I am on Facebook, livemylifedebtfree.com, Live My Life Debt Free. Thank you, Marquisa. I appreciate your support. I am on Instagram, and I'm also on Twitter. Thank you once again for joining my scope, and I hope that you'll be going to work out too. Have a great weekend. Thank you, Marquisa.